Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in the lower part of yesterday's range, and now heading into the open, the bigger question is whether larger time frame buyers are now going to step back in and stabilize the market, where ES can continue to balance above the 58.4275 to 53.75 initial support, which we're also using as the intraday bull bear zone. Or is yesterday's weakness going to continue and result in a move into one of the lower support areas where perhaps buyers can then step back in? So heading into the open, our intermediate and bigger picture bias will continue to be bullish, and our short-term bias will continue to be neutral bullish as long as ES is holding above the 58.4275 to 53.75 initial support. As long as we're holding above that area, there would still be potential for the market to continue trading in the recent 2 to 3 day range, and a break and hold below initial support on signs of initiative selling would serve as an intraday bearish indication. Now, what's different about a bias changing zone and an intraday bull bear zone is that if the market tries breaking below it and then breaks back above it, we have to then assume that the buyers are regaining control. So in order for the day's bias to not only turn bearish but remain bearish, ES needs to hold below 58.4275. If we get a breakdown attempt below initial support, but then buyers step in at 58.29 to 38 and push the market back above the broken initial support and the intraday bull bear zone, then the buy side can still regain control and we can still push back up into the recent range. So in order for the day's bias to turn and remain bearish, ES will need to break and then hold below 58.4275 to 53.75. And then above that, we have pre-market support at 58.5575 to 60 and holding above that area would be a sign of stability, and holding below the 58.60 high volume node would be an early sign of weakness. And then we have pre-market resistance at 58.66 to 69. A break and hold above that area would be a sign of strength, and it can result in a test of the initial resistance zone at 58.7475 to 84.75. And a break and hold above initial resistance would serve as an intraday bullish indication. And from there, if ES can take out 58.90 to 93 that would serve as an intraday bullish confirmation, and it can result in a test of yesterday's breakdown area at 59.02 to 59.07 with potential to retest the all-time high at 59.11 to 18.5, and then we would need to see above average volume and trend up type conditions in order for the market to make a new all-time high. On the downside, a breakdown below initial support would be an intraday bearish indication, and if that breakdown is going to sustain, then we also want to see weakness in the Nasdaq, and we also need to see sustained downside momentum. We know that in bullish environments, breakdowns have a tendency to fail. So if in real time we're seeing a lack of downside momentum, or the Nasdaq is no longer participating in the downside move, then keep in mind that we are still in an overall bullish environment, and buyers can still step in at 58.29 to 38, and there is at least the potential for a false or failed breakdown attempt. Now, that is something that we will need to assess in real time. So we're not predicting a false breakdown, but we know that in bullish environments, breakdowns have a tendency to fail. So if in real time there's a lack of downside momentum or a intermarket divergence where the Nasdaq is actually heading higher or at least not heading lower, then those conditions could lead to a false breakdown. In the event that we continue heading lower, buyers can still be active at 58.11.5 to 18.5, which is an intraday bias confirming zone, and the same goes for 57.92 to 58.0375. That is a bias confirming zone, and it's also the range exhaustion area, so there is a higher probability for buyers to be active there, especially on first test, and we will need to see trend down type conditions in order for the market to take that area out. And then as far as the NASDAQ is concerned, as long as NQ can hold above 20,196 to 20,254, there would still be potential for NQ to stabilize. So as long as NQ is holding above 20,196 to 20,254, the recent bullishness would still have potential to remain in play. And if NQ takes out 20,196 to 20,254, then that would serve as a bearish confirmation in NQ, and that can then spill over into the S&P. So that is the market context and trade plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the pre-market and initial support zone. That's going to help us determine our intraday bias, and we'll take it from there.